The investor we will talk about in this video might be one of the most underrated stock pickers in the world of superstar investors, the likes of Warren Buffett, Bill Ackman, Seth Klarman or Monish Pabrai. But he's one of the investors whose letters I enjoy reading the most, as they always show deep level thinking, occasionally pitch interesting investment ideas, and generally highlight what really drives long-term stock returns. And the 2023 half-year letter from Robert Venal was no different. In it, he discussed 4 different stock ideas, 3 stocks he already owns, and 1 new position he added this year. And in this video, we will focus on his new investment in a global leader in the global brokerage industry. So without further ado, let's get started. Okay, and I've once again prepared a little presentation that will walk us through today's video. So first of all, who is Robert Venal? Well, Robert Venal is basically a fund manager. He's managing the so-called business owner fund ever since 2008. And what we can see in this graph here already, which compares the performance of his fund to the German index DAX, he has massively outperformed his benchmark index. Although to be fair, I would prefer it if he would mainly benchmark himself to a US index, but as the fund is registered in Germany, I think, or it might be in Switzerland, probably in Switzerland, he chose an index from the so-called DACH region. But what we can also see here is that basically the last 2 or 3 years have been very rough for Robert Venal, especially in 2021. He has performed pretty poorly. Or I should say the stocks in his portfolio have performed pretty poorly, and we'll take a closer look at this on the next slide. So what you can see here is that in 2022, so it was 2022, his fund was basically cut in half. The fund was down 47%, which is pretty significant for a professional fund manager, and it really demands, if you want to stay alive, that you carefully manage your relationships with your investors, because otherwise I guess most investors who are not on the same page as you are will just leave your fund. But I think he has managed or maneuvered that year quite successfully, and as we can see in 2023 he's already up 27%, so I'm glad that he's doing much better this year. And as I said, I think his long-term outperformance and his long-term performance prove him right and justify where he deserves to be in the game and to manage millions of clients' assets, as we can see here over the very long term. Also, if we compare his performance to the Dow Jones Industrial Average, he has beaten the market quite handily. So over, what is it? It's probably like a 15-year period almost. He has compounded clients' money at a compounded annual return of almost 14% compared to 8% of the Dow Jones. But the history of his fund and the historical performance should not be the core focus of today's video. I want to focus on his new investment. But before we do that, let's take a brief look at his portfolio as of now. So as of summer 2023, what we can see here is that Credit Acceptance is his largest holding, at least in the US. I will get to that in a second, followed by Meta Platforms. Both account for roughly 1/4 of the US listed holdings in his portfolio. Then we've got Salesforce, we've got Wix, which is actually a company that I own as well, just like Meta, by the way. Then we've got Interactive Brokers, Carvana and Rupanian. You can already judge by the names you can see here. You will understand why his performance in 2022 has been so poor. Meta in particular has been one of the big losers, at least for the majority of 2022. Wix has also been a COVID winner, but then a big loser in terms of stock performance following the COVID bubble. And Carvana would deserve its own video. The stock, I think at some point was down like 90%, like a very significant number. Okay, but what's important to understand is that those weights, so I just said that Credit Acceptance and Meta represent 1/4 of his US holdings, do not represent the same weights when we look at the entire portfolio. So he discloses his top 10 holdings in his fact sheet, which you can find on the website of his fund. And there we can see, or there we can already spot a couple of names of stocks that are not listed in the US. So we've got Grenke, for example, which as far as I know is a German listed company. We've got Broses, who is mainly listed in the Netherlands. We've got Ryman Healthcare, which he, by the way, also discussed in detail in his most recent letter, but which we will not focus on today, which is based in New Zealand. And another one, TFF Group, is based in and listed in France. Yeah, and in his most recent 2023 half-year letter, he was also discussing the topic of portfolio management, and more specifically why he really enjoys running a concentrated portfolio, which is not easy in the DACH region. He discusses this as well. There are a lot of restrictions for hedge funds, but he has chosen a form that allows him to run this concentrated strategy. And he sees a couple of benefits in running a concentrated portfolio. He lists 4 here. I've highlighted them, and of course you can see it on screen. So first of all, it allows the fund to outperform. If you own too many stocks, it's very likely that you will basically just mirror the performance of broad stock indices. And then of course it allows him to understand the companies at a deeper level, because obviously it's much easier to analyze 10 stocks in depth than 100 stocks at a time. It allows him to build deep relationships with managers. For example, towards the end of this letter, he also outlined that he invited one of the Wix executives to the business owner annual meeting, and he has invited other executives of other companies he's an investor in the past too. And I think that's actually highlighting that he is very close with management and has access to management teams, and yet truly understands the I would call it motives of management teams. So what's really driving them, and he's said that before, that he likes to invest with managers who are not driven by money incentives, but really want the business to succeed. All right, so let's get to the focus of this video, the new investment. I've actually dropped the name already. It's Interactive Brokers, which is not new as in a new position built in Q2, but actually started building that position in Q1 of 2023. So as we can see, in Q1, he was already buying 200,000 shares of the global brokerage firm. And now he added another 85,000 shares to that position. And in the letter, for the first time, he actually discussed this new investment. So just a brief overview of the business. What you can see here is, first of all, the stock chart of Interactive Brokers. I've highlighted the beginning of Q1. So I guess the lowest price he paid for the stock was somewhere around the low 70 mark. And I also highlighted when the Silicon Valley Bank crisis occurred in March 2023, which we will get to in a second, because this event basically, according to Robert Venal, gave him the opportunity to buy the business at an attractive valuation. So what does the business actually do? I've noted it down at the bottom. Interactive Brokers Group operates as an automated electronic broker worldwide. The company specializes in routing, executing, and processing trades in stocks, options, futures, foreign exchange instruments, bonds, mutual funds, exchange-traded funds, and so on and so forth. It also custodies and services accounts for hedge funds and mutual funds, ETFs. Yeah, and I think you can pause the video and read the rest to yourself. I would assume that many of my viewers actually buy and sell stocks through Interactive Brokers. I know that I do. I basically hold my portfolio in a broker called Lynx, which is kind of a German branch of the Interactive Brokers Group. All right, so Interactive Brokers obviously operates in the financial services industry. Its market cap is around $10 billion. Interactive Brokers employs around 3,000 people, generates revenues of around $4 billion, and also pays a small dividend. Now, here's basically what Robert Venal wrote in his letter about the business. He also gave us like a high-level overview of the business. He wrote, IB provides online brokerage services and trading platforms for a wide range of financial instruments. I think we've discussed all of that, and offers all of these trading tools and the market access to various markets at very low prices. What's maybe an interesting point is that Interactive Brokers has around 2.4 million accounts, and what you can see on the right is that the majority of those accounts actually accounts of retail investors, so individuals. Around 1/3 of these accounts stems from the Americas, Europe and Asia each, although America, or I should say the Americas region, makes up the majority of revenues. You can see that in the second paragraph, around 1/2 comes from that region. I just referred to Lynx, right? So basically another brand that is not operating under the Interactive Brokers brand, but still has access to the Interactive Brokers platform. And going forward, and this is what Robert Venal also highlighted here, these white label brands basically offer attractive growth opportunities for Interactive Brokers. Now, what's Robert Venal's investment thesis? I think there are 4 pillars that he highlights in his most recent letter. Let me just very briefly discuss all 4 pillars. So first of all, there was an event. As investors, we like events because we want to buy shares when they are pessimistically priced and not when they are optimistically priced, because when there's a lot of uncertainty and pessimism in the market, this tends to coincide with attractive investment opportunities. As I wrote here, you never want a serious crisis to go to waste. Monish Pabrai wrote in his book, The Dando Investor, the best opportunities lie in investing in businesses that have been hit hard by negativity. And what I would add to that is that an event creates uncertainty. However, an event is only attractive to long-term investors if the problem that is occurring can be solved within a reasonable period of time. Ideally, within 1 to 3 years. I would say if the problem can be fixed too quickly, institutional investors with their short-term focus might not sell the stocks or might also be interested in the stock. But I think the biggest opportunities occur when there's an event that creates a problem that can only be fixed in the medium term. Just one more slide on that particular subject. I think if there is a crisis, great companies usually come out ahead, and it's only the bad companies that really suffer during turbulent times. So that's why we want to own businesses that have healthy balance sheets, that have pricing power pretty much regardless of the overall environment, that have lots of growth opportunities, and that are run by good management teams. I've actually developed an entire framework that classifies different kinds of events. And I would say in the case of Interactive Brokers, the event that Robert Venal is also referring to, we were seeing an industry-related event. So he wrote, we purchased our initial stake in IB in March during the crisis triggered by the collapse of Silicon Valley Bank. Fears of a repeat of the great financial crisis led investors to sell shares of financial services companies indiscriminately, including those of Interactive Brokers. In the case of IB, the share price drop appeared unjustified to me. IB is financially sound and had not made the mistake of many of its peers of investing customer assets in long-term bonds when interest rates were at historic lows. As such, the crisis looked more likely to be a tailwind than a headwind for its business. The situation reminded me of the great financial crisis when panic selling by investors created opportunities to buy, quote-unquote, the babies thrown out with the bathwater. All right, before we move on, I just want to point out that I am offering to mentor people, teaching them how they can invest actively themselves, which might help them reach their financial goals more quickly. Basically, getting requests every single week now. Obviously, I will have to determine whether I think you are a good match for this program, because not always our philosophies and goals will align. I will also not be able to help everyone. But if that is something you would be interested in, take a look at the link that I've put in the description box down below. to learn more about this unique offer. Okay, let's move on to the next pillar of Robert Venal's investment thesis for interactive brokers, which is the business's competitive position. So what kind of moat does interactive brokers actually have? I think the biggest one is what is often referred to as scale economies shared. So scale advantage, which the business shares with its customers. And again, let me just quote what Robert Venal wrote. He writes, "Interactive brokers' main competitive advantage is that it's a low-cost producer. It achieves a best-in-class cost structure through a high level of automation based on proprietary technology and superior scale. It can offer customers the lowest fees for trading, the lowest interest rates on margin loans, and the highest interest rates on qualifying deposits, and still enjoys a 65% operating margin." And according to Robert Venal, that's basically a self-reinforcing loop, which I fully agree with. I think scale economies shared competitive advantages are among the, if not the strongest competitive advantage in the world of business. And just to give you one example here, to back it up with real numbers, on the right you can see a screenshot that Robert Venal also included in his letter. It shows basically the interest investors can earn on the cash sitting in their accounts. Here it's for accounts with more than $100,000. But the same is true for smaller cash balances too. But you can see that basically none of the competitors listed here in that screenshot can compare with the interest rate provided by interactive brokers. Yeah, and I've actually taken a look at some of the investor relations presentations shared by interactive brokers. And in one of them, they, for example, highlighted that Barron's has recognized interactive brokers as the low-cost broker 2002 through 2022, which I think is super impressive. And basically, Robert Venal already highlighted it. Some of the scale advantages shared with investors are mainly low fees when it comes to buying and selling securities, but also then the interest rate earned on cash sitting in the interactive broker accounts. Just to finish this part, here's the margin profile of interactive brokers. We can see the already referenced impressive operating margins of interactive brokers, but then the net income margins are actually significantly lower due to the nature of interactive brokers business, but still they're pretty much around 10%, fairly stable, actually growing ever since 2016. So those are all characteristics that we like to see in businesses. Although personally, I would like to see the net income margin to be a little higher. But then again, to be fair, for a scale economies shared business, it's actually not unusual to have relatively small net income margins. And I would say those are actually not really small. Net income margins of 11 and 12%, actually absolutely decent. And I would have to look up the current averages, but I guess that's pretty much the average profit margin of an S&P 500 company. All right, then another mode besides the scale advantages that interactive brokers might enjoy are switching cost advantages. To quote Robert Venal again, another competitive advantage is the high level of customer stickiness. And I would agree with him. I think switching cost is another mode that interactive broker possesses. But personally, I would argue that the switching cost mode strength is not particularly high. It's a little inconvenient to switch brokers, but I've actually done it in the past twice, and the process was fairly smooth. Although I've been with my broker for 4 to 5 years now, and to be fair, I would be fairly reluctant to switch now, especially because I'm super happy with the service provided by Lynx in my case. And now pillar number 3, the management team. And Robert Venal basically highlights that interactive brokers is an owner-operated business, which investors always like to see. He still owns a significant portion or stake in the business. He likes the long-term focus of the founder. And again, you can feel free to pause the video right here to read what Robert Venal specifically wrote in this part of the letter. He later also highlighted that Interactive Brokers is fairly conservatively managed, which in the short term might be a negative because it doesn't maximize returns on equity, but over the long term this may actually prove to be the right approach, because I think the conservative approach by Interactive Brokers also gives the broker a lot of trust among clients. And then at the bottom of this slide I've actually included what Interactive Brokers management shared in the Q2 2022 earnings call. Obviously, if you make an investment in a broker, you to some extent also have to have an opinion on where interest rates are heading. And all I'm highlighting here is basically that rising interest rates, and if we will see those higher rates for longer, this will overall be a net positive for Interactive Brokers, although, as highlighted, they are also going to share some of the profits that they earn on the cash balances that they reinvest for clients into short-term treasuries or on short-term bank deposits with their clients. Which brings us to the last pillar of Robert Venal's investment pitch, the price of Interactive Brokers, because when he made that investment, Interactive Brokers was actually trading at a price to earnings multiple of just 14. And I would argue that Interactive Brokers is the leader in the brokerage industry, especially among retail investors. And it's certainly an above average business, which when it was trading at 14 times its earnings was trading at a below average price. So this is always a very enticing setup, buying above average quality businesses at below average prices. So what you can see here is basically the price to earnings multiple of Interactive Brokers over time. And what we can see here is that when the stock was trading at just 14 times its earnings, I would say in absolute terms, that's not a particularly cheap multiple, but compared to its own valuation and historical valuation, that was certainly a cheap valuation. And as of today, the stock is already tracked back at a valuation multiple of 19 times earnings. So the setup today is arguably much less favorable than a few months ago when Robert Venal started this position. I also want to point out a quick rule of thumb that I came across this week when I listened to a Focus Compounding podcast. In it, Geoff Gannon shared that if the valuation multiple of an investment you make expands by a factor of 1.6x, so say, for example, from a price to earnings multiple of 10 to 16, this will basically contribute to your compounded annual return, obviously depending on the time horizon of your investment. If over 5 years the multiple expands by a factor of 1.6x, this already translates to a compounded annual return of 10% a year just driven by the multiple expansion. If you increase the time horizon to 10 years, the return generated from that multiple expansion still is 5% a year, which is super impressive. And even over 20 years, it's still like 2.4% a year. So all I'm trying to say here is that when Robert Venal bought Interactive Brokers at just 14 times its earnings, I think he was definitely buying the stock at a decent margin of safety, because I don't think there was much risk of the multiple declining much further. Obviously, you never know, but 14 times is already quite low. And I think a lot of potential for the multiple to expand to a more normal level compared to Interactive Brokers' historical valuation. Now, if we just get back to this part of the letter again, he then later also outlined that he expects Interactive Brokers to continue to grow going forward. He expects basically an annual account growth of around 15%, which to some extent will also translate to revenue growth. I've included this slide deck from Interactive Brokers myself, which basically highlights that the run rate for growth is still very large. As we have highlighted at the beginning of the video, around half of Interactive Brokers' revenue as of right now stems from the Americas, but a large percentage of the overall population, world population, is not living in this region, of course, so there is a lot of growth runway left. What I've shown you here is on the left, first of all, how the number of accounts has developed over the years. As of today, it's around 2.3 million. It grew 90% year over year this year. On the right, you can also see Interactive Brokers' revenue growth, which has been rather volatile, one has to point out, but at least revenue has been growing somewhat consistently over the last 10 years. Yeah, and that's it for today's video. Let me know what you think of Robert Venal's new investment, whether you think the investment might still be attractive at today's valuation, and I'll see you in one of my next videos. Take care.